We mine this amount of silver every 9.6 minutes. We use this amount of silver every 6.8 minutes. This will end well. So we're using up this 6.8 minutes. We use up as much as takes 9.6 minutes to mine. Something has to give, and what has to give is price, so that this eventually slows down to match that. Or the other thing is that enough miners can go out at these, we need some astronomically high prices to cause a silver rush of miners to open up new mines. Tavi Costa points out that foreign central banks now officially hold more gold than U.S. Treasuries for the first time since 1996. Let that sink in. If you think this buying streak is ending, just look at what happened in the 70s. This is likely the beginning of the most significant global rebalancing we've experienced in recent history. You need, Tavi, you need to drop the word recent out of there. In history, period. Here's another gold update. Ryan Dietrich shows this great chart. Gold is up 40% in 2025, its best year since 1979. But what I really want to point out here, this is 40.3%. And if you go across here, here's 37%, so very close to it. But then 1979, 1974, 73, 72, this first part of the bull market. Now, this was only Western Europe and Canada. It was still illegal to own gold or trade gold in the United States. This is this is some spectacular performance, but what this is saying is that the best is yet to come. We haven't even gotten started yet, folks. So James Anderson, my friend James, we worked together for many years. James started at goldsilver.com many, many years ago. 39% of fund managers surveyed are gold broke. That's 39, and it looks like it was about 41 or 42. It's 39, so these people that have no gold whatsoever, these fund managers, and I love this, money managers who don't know the first thing about money. They don't, because they're not buying money. They're invested in things that are everything's measured in currency to them. So 39%, 20% of them have 4% gold exposure, 16% of them 2%, 8% of them have 6%, and 6% of them have 8% or more. Only 6% have 8% or more. And I guarantee you there's going to be a day where all of them are going to have some exposure, and it's going to be at least 10%. Money managers, I don't know if they had these funds then, but brokers and so on, they didn't recommend gold back in the bull market of the 70s. It wasn't until after it was too late that they started recommending, put 20%, 25%, 30% into gold. And then that became less and less and less until it's, just 10%. And then it basically, by the year 2000, when gold was just $250 an ounce, they're saying don't put anything into gold because it's dangerous. You could lose. And because they want to sell you their products. And then you hear this fallacy of, just put 10% into gold because gold is so volatile, it's dangerous. Well, it's been the best performing asset of this century, other than cryptos, but when you start at zero, from 0 to 1 is an infinite return. Bar charts created this wonderful chart, and they were saying gold hit the most overbought level on the monthly chart in 45 years. Now, I tried to duplicate this chart, and notice it goes back to 79. I went back a little further, and I found something very interesting. If you go back further, first of all, it's not as overbought on the MACD that I was able to generate, and this is on a monthly, it's not quite as overbought, but it is in seriously overbought condition. But look at the first part of the bull market. Now, I'm going to zoom up on this a little bit more, the 70s bull market. So we are not yet as overbought as we were in 1980. So it would actually be good for gold to go sideways for a month and work off this overbought condition. But I'll tell you, none of this matters in a currency crisis. Gold will just continue going north and get more and more and more overbought, and it has nothing to do with the situation. It does not matter. Here is the entire bull market of the 70s, and this is only Western Europe and Canada driving the price. It was illegal for Americans to own gold. It was illegal for Australians to own gold. For Americans, until the first day of 1975, Australians the first day of 76. But the first day of 75, it started falling. Why? There are probably two reasons. One reason, the gold nationalization of 1933, when Roosevelt nationalized gold, he did not confiscate it. When you hear somebody use that word, it's usually some dealer trying to move you into an overpriced collector coin from bullion, because bullion has these minuscule profit margins on it. So I believe it was 73% of all of the gold coins that were in circulation were not turned in to a member branch of the Federal Reserve System, which is what the instruction on Roosevelt's executive order said. And so they remained in private hands, in hiding, but you couldn't do anything with them. You couldn't sell them. And so people sat on those coins for 50 years. So they were passed down from father to son, maybe from father to son to grandson. Who knows? But after sitting on them for 50 years, they were $35 an ounce. Gold had gone from 35 to just under $200 an ounce. And so all that gold that had been hiding in safes and shoe boxes and under the mattress for all those years comes out of hiding and gets sold into the market, and it falls down to 103. Simultaneously, there was a crash, the stock market crash in 74, and then it started to bounce out of it in 75. So the stocks are outperforming gold, but by September of 76, it turned around and went from 103 to 850 on the close, 873 intraday, and coincidentally, the Dow was at 873 points at the same time. So 1 ounce of gold bought the Dow. So that's a picture of the bull market of the 70s. If we zoom up to the 1976 bottom at 103, you can see that gold right at around just below 400. It went past it, but then sort of stalled and went sideways. And that was October and November. And then in early December, it took off again. So during this time period, it worked off some of that overbought condition and then got overbought again. That was this area right here. But once it passed that previous peak, it was just off to the races. And there's only about, I can't remember how many trading days there is. There's holiday, Christmas, it's closed Christmas, New Year's. And so it wasn't very many trading days to get up from this $425 level to $850 on the close, to double in just a few trading days. So I just want to remind everybody that I'm going to be at the New Orleans Investment Conference, and I don't know who the guest speaker is, the keynote this year, but look at that, Milton Friedman, Ayn Rand. These other people are very highly respected. Please use neworleansconference.com/Maloney so that we know that you came from watching my videos and so on, and I will try to make some time available to the people that sign up because of this. It's November 2nd through 5th. So Make Gold Great says, we mine this amount of silver every 9.6 minutes. We use this amount of silver every 6.8 minutes. This will end well. So we're using up this 6.8 minutes. We use up as much as takes 9.6 minutes to mine. Something has to give, and what has to give is price, so that this eventually slows down to match that. Or the other thing is that enough miners can go out at these, we need some astronomically high prices to cause a silver rush of miners to open up new mines. And so we need this to meet this right here. Except what's going to happen is astronomically high prices will cause a lot of the uses of silver. They're going to be very, very frugal with the uses in industry. So we might be able to use up this amount of silver every 9.6 minutes instead of every 6.8 minutes. Who knows? But these things have to reconcile eventually, and they will, and it's going to be through price. Tavi Costa points out that foreign central banks... Hi, it's Mike here. Just a quick message. I wanted to welcome the huge number of new visitors to our videos, but point out that less than 15% of our viewers have subscribed to this channel and hit the notification bell. We're heading into some turbulent times, so if you don't want to miss any updates, make sure you enable notifications. And thank you as always for clicking the thumbs up button. One more thing. At goldsilver.com, we've been providing top-notch educational content for over 20 years. If you'd like to help us continue this mission, we'd be honored to be your precious metals dealer. And now, back to the video. Tavi Costa points out that foreign central banks now officially hold more gold than U.S. Treasuries for the first time since 1996. But look at the percentage of foreign central bank reserves that were in gold back in the 70s and 80s and where we are today. With the distrust in the dollar and with all of the accumulation that you're seeing with foreign central banks, this is going to be a very steep upslope on this side of the curve, and it's going to continue. So let that sink in. If you think this buying streak is ending, just look at what happened in the 70s. This is likely the beginning of the most significant global rebalancing we've experienced in recent history. You need, Tavi, you need to drop the word recent out of there. In history, period. What has happened is we went from full gold backing before World War I to 40% gold backing when we opened the Federal Reserve. Then there was a shift in the world monetary system with the Genoa Conference of 1921. But we've gone from something rock solid to a little bit less of that something, 40%, to the Bretton Woods system, which had no reserve specified, and it fell to 8%, to nothing when Nixon took us off of the Bretton Woods system in 1971. And now we're going to go from nothing back to something in a huge, giant step. It is probably going to be the biggest event in monetary history, period. And so I think we are in for something really big. These are some pretty exciting times. Mr. Yuppie, history rhymes. Gold now makes up 15% of world reserves, the highest level in 30 years. And like I said, this side is going to be a very steep upslope. Now, what do I like buying? What are my own investments? I buy this thing called InstaVault, where you can hold gold in a vault at Brinks that is guarded by guys with guns, and we provide the lowest price close to spot as we can, because you're buying an interest in 1,000-ounce bars of silver or gold. Then I like 1-ounce American Silver Eagles. That is my largest allocation of silver, is Silver Eagles. I like Gold Eagles. I like gold bars. I have quite a few, silver bars, 100-ounce silver bars. I have quite a few of these, but my biggest holding is Silver Eagles, but they're in these mint cases. These things are great. Leave the straps on them. Don't open them. They're sealed from the mint they come from. And so those are my pet rocks. And Carlo says, laughing all the way to the bank. Well, I laugh all the way to Brinks because it's not part of the banking system. That is where we offer storage, is at Brinks. So Warren Buffett said, gold is a pet rock. You dig it up in one place only to bury it in another, meaning a vault. So I want to thank you for watching. We'll see you next time.